Managing risk is the most important thing you can do. Like when making financial decisions, understanding things not in a sense of a system instead of just how does it affect me, but rather like how does it affect the entire system. Um, I am not. I wish I could was like. I wish I could take my own advice sometimes. But managing risk is not something you do emotionally. It's something
I
you
feel
do
you.
with like a cold heart. And also eat protein. Eat protein. Don't eat carbs.
What's up, guys? Welcome to another episode of the DGN Radio Podcast. I'm your host, Thiago Vilela, and today I had a great and very insightful conversation with DeFi Dave. Dave is an OG in the DeFi space, having worked in a few stablecoin related products and now building Cap. Cap has a very unique and interesting design as a yield bearing stablecoin. And we covered everything about Cap and why is it safe and how the users get yield, where does the yield come from, and a lot of things, especially after what we had last week regarding all the blowups and the bad debts in DeFi and all the DPEGs from quote unquote stable coins that were actually tokenized hedge funds. We discussed a little bit about this, how we can get this better, like how this cap improves like the current system, and a lot of things. It was a pretty good conversation. So let's hop into the episode. Hey Dave, welcome to the show, man, and thanks for coming. How you doing? Can you introduce yourself a little bit and talk about how did you get into crypto?
Yeah, sure, for sure. Thank you so much for having me on, Tiago. It's a pleasure and honor to be here. Thanks for reaching out in my DMs. It's funny because like I know you're Brazilian, and I've been down to Brazil so much. It's like a big part of who I am. I'm actually going down to East Floripa in a few days, so I'm looking forward to that. But anyways, hello everybody. My name's DeFi Dave. I am the head of growth of Cap. I've been in crypto for 8 years. Been working on DeFi things for 5 years. I've contributed to projects such as Frax, Gelato, Dinero Redacted, doing everything from marketing to business development to storytelling. And I have a few side quests in between, whether it's a podcast called Flywheel, ETH Bushwick Things, and what else? You'll see me around. I've been around for a while.
Yeah, it's great, man. And when you joined crypto, what were you doing before? Can you comment a little bit on how
Yeah,
did you get into crypto?
I
I would
got
like to ask that.
I got into crypto by accident, actually. My first job, I was a writer at an online encyclopedia, and I was writing about all sorts of different things online in like a wiki form. And then one day in 2017, we woke up and we were like, what if we were a blockchain encyclopedia? And that's how I kind of got pulled into crypto. And I kind of just fell in love with it. I was immediately just attracted to the intellectual vigor of it. I was really attracted to how it was like really at the cutting edge of tech, economics. Like it's a very interdisciplinary field, very new. My background is not in finance or business. I studied political science, history, philosophy in college, and I still try my best to read up on all those subjects today. So I come much more from a humanities background, and I think that's quite unique going into crypto and DeFi from that background. So got in 2017. Went from being a writer of an encyclopedia to doing more business development. I think my claim to fame at that job was we actually convinced the Associated Press to be an oracle for the presidential election in 2020. And that
Okay.
was very useful for certain prediction markets. It's funny to see prediction markets
Yeah.
as a narrative now because that's something I've worked on in the past, even at my old job. But anyways, I got into DeFi in 2020. DeFi summer kicked off, and I was immediately attracted to it in the same way I was attracted and inspired by Bitcoin. I was like, oh wow, this just makes sense. I think a big difference between Bitcoin and Ethereum is Bitcoin is the scarcity mindset, which is their nature, which is fine. That's their thing. Ethereum is much more of an abundance, open world mindset. You can build on Ethereum, and I think finance is the killer app of Ethereum, and DeFi really. I mean, there are a lot of games happening in DeFi, but it showed like, oh wow, this is like where we could go. And I feel like I'm realizing that with Cap. And so did DeFi things in 2020. Was lucky enough to hop on to Gelato and my career just started taking off from there.
Oh, cool, man. That's very interesting journey.
Yeah,
Like from
definitely. It's not your typical journey for sure. I don't think I've
what
had a very typical journey, to be
yeah,
honest.
yeah, I didn't either. So yeah, that's I think that's the great part about crypto. Like there's people from every kind of background, and they
Yeah.
find themselves. We find ourselves here with like doing a bunch of interesting stuff.
Yeah, and
And
I'd say the most important thing is just to stick around. I just stuck around, and opportunities just came my way. And you just when you stick around and you show 80% of anything is just showing up, and when you just show up day in and day out, people notice. You notice things, and that's how you take the most advantage of things.
yeah, for real, man. And you talked about DeFi. There's a bunch of things happening in DeFi this week. Like,
Yeah. Oh my god, it's been a week indeed. Oh my,
yeah.
and it's
Man,
like interesting. Yeah, what were you gonna ask?
no, you can go.
It's interesting being in crypto for so long, and so you've seen stuff like we've both seen stuff like this happen before. When I look at stuff like stream finance, I kind of think of it at like that kind of reminds me of like Celsius and 3AC and all this stuff. Like you're giving somebody money, and like they're going off and like doing God knows
Yeah.
what with it. It's like the trust me, bro concept, and which is it's like I thought we learned our lesson, but I guess we didn't. Um, yeah,
Yeah, I think there is one like one step ahead that people didn't learn is that stream finance has like XUSD, and like people look into the USD ticker and they think like, oh, it's a yield-bearing stable coin, and oh, it's on chain, it's verifiable, and but they don't verify because it's verifiable, they think it's safe. And without the Celsius and BlockFi 3AC, you couldn't verify. That was the only difference, but I
yeah.
think a lot of people fell on it because of this small subtle difference.
Yeah, and then with like the Morpho, I make this comparison saying like these are two very different protocols, but it just kind of like echoed and reminded me of something in the past. Like, do you remember like like the Rory pools, like the Rory pooled lending,
Yeah,
which they were like compound vaults? They were like basically mini like forks of compound different pools, but they
yeah,
had different curators to those vaults. When I like looked at when I see what like happened with Morpho, it's like the same thing of this like curated vault, and then
yeah.
like things, but not exact same thing, but like quite similar in terms of
Yeah,
like
yeah,
yeah,
that's some parallels too. Man, I think if we keep going on this front, we can stay here like for a couple of hours.
yeah. Oh
And
my god, yeah,
yeah, let's get an intro to Cap, and then let's talk a little bit about all these events and what's the difference between Cap and
yeah.
some
I think
protocols that were
he's
affected.
yeah,
It Yeah, go a little bit on that
yeah,
because I have like I don't know like a ton of stuff to talk about this, and
yeah.
you're a very knowledgeable guy in the space, so it'd be a great conversation for sure.
I
Can
think
you?
these past events really it illustrates why CAP exists and why CAP has come into being. Because you shouldn't have to try when you're holding a stable coin, you just want it to be stable. It has one job. You just have to rely on it not to depeg or not to make sure there's no funny business. You just want it to be stable, and and you shouldn't have to trust your counterparty. You should just you should the only thing that you should trust is the only thing that you really can trust is like these on-chain credible guarantees, and that's where CAP comes in. So, what is CAP? CAP is a stable coin that uses the power of restaking to allocate capital and protect users from downside risk. CAP has a three-pronged system, and what makes CAP unique is not only the system, because you can that's like just the body, but also the people involved in the system. For example, we had Franklin Templeton. They led our seed round. A lot of our operators are market makers, people borrowing from the protocol, or institutions um, that are TradFi and not your typical DeFi outfit. So it's not just about the mechanisms of the protocol; it's the people participating in the protocol as well. So how does CAP work? So CAP is a three-pronged marketplace. There's three parties involved in CAP. So you have users. These are the people, they mint CUSD with USDC. We just announced actually Wisdom Tree, WTGXX, which is their money market fund. You'll be able to mint CUSD with an institutional money market fund soon. So institutions excited about that. Then you have our operators, and these operators, they borrow from the protocol, and these are market makers, trading shops. So think like IMC Trading, Susquehanna Crypto, Flow Traders, like people like of that sort. They they have like they're trying to grow their book. They have a bottom line, and so they want to be borrowers. And then you have restakers, and these are this is eigenlayer symbiotic. This is like your EtherFi, Renzo, Kelps of the world. They have this capital sitting there. They have like ETH, BTC, and whatnot. And with this capital, they underwrite the entire system. So those are the three parties involved. And how it works is operators and restakers, they'll team up, they'll come to some sort of an agreement. Operators are, hey, this is who we are, this is our strategy. The restakers will be like, great, and do their due diligence. And if they feel comfortable, they'll delegate their restate capital, whether that's restate ETH or BTC. They'll delegate that to the operator, and that delegation acts as collateral for the operator to access the underlying USDC and of the CAP protocol. So they get the delegation, they go to the CAP protocol, and they take out a loan, and they go do their strategy. Maybe the strategy is open for like a week, a month. Maybe the opportunity is a bit longer, a bit shorter. It doesn't matter. All they have to do is pay back the loan of the protocol. Then they pay premium fees to the restaker. So it could be like anywhere from 2 to 4%. And then all the money they keep on top of that, they just made at no cost of capital. And so that they love that. And so what's really interesting about this dynamic is in the eyes of the operator who's borrowing from the protocol, they just received an uncollateralized loan. But in the eyes of the protocol, the loan is fully collateralized because they got vouched for it by restakers. I like to say this is really the first instance of reputation-based lending on Ethereum, which is something that Vitalik has talked about in his low-risk DeFi article. And so the operators love it because they get free money. Who doesn't love free money? Restakers love it because it actually puts their idle capital to work. There's very little there's very little opportunity for yield sustainably with like ETH and BTC, especially restaked ETH. Like there's only so much you can do with it. And so I like to say that the PMF for restaking is yield, and CAP is really the first instance of that. And so restakers love it because we actually give them something that's value, like that's actually tangible, that isn't just farming. And then users love it. They love it for two reasons. One, they get access to what I call an infinite canvas of yield, because you have different operators who are borrowing from the protocol that are fighting to have access to the capital. And so in a way, I like to think of it's like kind of like a microcosm of all of DeFi and finance, because you can really see how the wider, if any strategy can plug in into CAP, then it really is a smaller mirror and reflection of the wider system. There's other stable coins that are they're either just one strategy or people are choosing strategies. In CAP, you have the markets that decide the strategies, and markets are allocating to the most efficient performers. Like a metaphor I like to use is Uber has no cars, but it's the biggest taxi company in the world. Airbnb has no houses, but it's the biggest hotel company in the world. CAP has no yield, but it's going to be the graded financial yield aggregator in the world. And so infinite canvas of yield, that's one. And two, users are always protected. And this is the most important thing, because like I said at the beginning of this rant, that's like, you shouldn't have to like trust other people. Honestly, you shouldn't have to trust the other borrower. Otherwise you get a stream finance situation. You need to have someone that's going to basically stake their rep on in case anything goes wrong. So let's say something does go wrong, like an operator, they run off, they screw up or something. Remember, it's the restaker that vouched for them. They delegated their capital. So it's the restaker, they get slashed, and what gets slashed is sold back into stablecoins and put back into the collateral into the protocol, the USDC and whatnot, backing CAP. And so you have this really elegant system where everyone is still acting in their own best interest, but and most importantly, everyone's abiding by the rules of the CAP protocol. So it's really unique. Yeah. So that's how it works.
It is about.
Yeah.
Oh, go from my
I was
bad.
gonna say we launched like 2.5 months ago. We're at 290 million TVL. At our peak, we were at 350 million before all this funny business happened. But CAP remains unaffected. Our protocol has been functioning normally. No restakers were slashed or anything. Everything, we're fine. And what's cool about Cap is everything, like I just want to reiterate, like all our reserves are transparent on chain. You can go. We've had some people in our community make some dashboards on Dune. You can see all our reserves there. So it's not like
Oh, that's
trust me,
cool.
bro. Yeah, trust don't verify.
Yeah,
Something
we can.
you
Can
forget.
you check the wallets on DBank or something like that?
Yeah, hold on. Let me there's a can I send you this guy's tweet?
Yeah,
Uh
sure.
give me a sec.
You can send. Yeah,
Um
man. You uh, you
yeah,
can send here on either a private chat or on DM on Twitter. Or
yeah.
what works better for you? The interesting thing about like the cap design that it aligns incentives. It's like
Mhm.
it does what crypto is supposed to do. Like when what drove me to Bitcoin first and then DeFi and crypto is align incentives. People are not like inherently good or bad. They are like driven by incentives, and some people starts like bad, some people drift a little bit like good, but everything comes down to incentives. And what the blockchain does, smart contracts, it's align incentives. But with all the, I was going to say centralization, but I do think some stuff need to be like centralized. But
Yeah, I think
but
it's like a spectrum of coordination. You have things
yeah, yeah,
you have like the
yeah,
most decentralized, which is Bitcoin. Then, Be-
yeah,
beautiful. And then you have Ethereum, and then as you go up, it's at the end of the day, like especially in DeFi, there's so many different parties involved that decentralization is. I wouldn't. It's not like 100% a myth, but it's like not as like it's not. You can't say that it's like decentralized in the same way as
yeah, yeah.
Bitcoin, because by that I mean you have so many different reliances. So you're relying on like other smart contracts, you're
Mhm.
relying on oracles, you're relying on liquidity providers, and so there's all these different things you have to rely on. But as long as people can be held accountable, I think that's like, especially with stablecoins, that's the most important thing. Um, yeah, I'm trying to think where else I'm going
Yeah,
with
no,
this. Yeah,
yeah, I think I got it. And just so that if people listening here they didn't get that, so in Cap you have like the three parties and the his takers. They provide the capital to the operators, and the operators they pay the yield as an uncollateralized borrow agreement, and they pay higher yield because since they don't need to put capital front, they have more capital efficiency, they can pay a little bit more yield.
yep,
That's how the system works.
yeah,
If
that's
you
correct.
didn't get it, so that's the beautiful part about the system. And for me is like first, I think you guys just found like product market fit for Edo risk taking capital. I think it is the I don't know about like AI and data the Eigenlayer is doing. Like I'm not following this very closely, but from what I see, and this is like the first like real use case for his taking, and this can be like can open up a lot of like new ideas and also like new primitives that can be created either on top of Cap or on top of like other stuff, not just like
Mhm.
with stablecoin yield. But
Yeah, I could see
this
like a fixed yield protocol being built on top of Cap in the future.
Yeah, there's something like Strata. Do you know Strata?
I've
That
heard of it.
they're building like risk crunching mechanism on top of USDE with Tina.
Yeah, that's it.
Yeah,
Yeah,
yeah, the last episode that I published was with Ramir Vish from the team, and yeah, it is a very interesting one to like fixed yield on top of, it's not fixed but like a minimal yield on top of Cap would be something that makes sense. And I was thinking more about the risk taking and stuff, and on top of Cap like structured products and all this stuff I think it can comes live. But yeah, I'm starting to rant a little bit here, so
yeah.
let's go back.
I
Eh,
there's on the point of restaking, I think what's really cool about it is like right now we're starting off with ETH and BTC, but in the future we can have gold, we can have other foreign currencies, other stable coins. Imagine the Japanese yen, imagine the Singapore dollar. In the real world, these assets don't earn that much yield, but
yeah,
And imagine telling somebody with a Japanese yen that they can earn 2 to 4% on the yen. That is a
Yeah.
very attractive option. And so, that's the direction I see Cap going into the future, is like bringing bringing utility to other types of foreign stablecoins. Because right now, like the only stablecoin that really matters is the U.S. dollar, is digital dollars, and for good
Yeah.
reason. But this can actually like make it more of a reason for other foreign currencies to come on chain as their own stablecoins.
Yeah, for sure. It's something with the growth. I think we're gonna see like more like sooner than later. And man, on still on this the incentives alignment part, and with all that happens on this week, one problem like with what happened with Stream Finance, that the stream blew up, and there's a lot of like curators that has exposition, and the oracles were hard pegged one to one.
They're hard pegged, yeah.
Yeah, they were hard bagged. There was like a big mess, and I think you're probably gonna tell a little bit what happened better than me. Can you tell a little bit to everyone here what happened, like with the stream and the like 4 or 5 JPEGs we had after it?
Yeah, you know, I'll try to explain in my own words because I try to have read up on it as much as possible. Um, but basically, people gave Stream Finance money and they went off to do their own farming activities. Um, I'm sure there's like a lot of allegations and speculation of what they actually did and what's confirmed.
Yeah.
But there's a lot of looping and recursive looping happening, and eventually what happened, I'm sure what happened was October 10th, when we had that $19 billion liquidation. There was a lot of people caught with their pants down, and a lot of bodies yet to come to the surface. And Stream Finance is just one of the bodies to come up to the surface. And there's and there were a lot, and it wasn't just an isolated incident. There was like a lot of other stablecoins involved. Not a lot of other
Stable
stablecoins involved.
coins. Stable coins.
Stablecoins,
Quote
yeah,
unquote.
but really these aren't stablecoins. These are just tokenized hedge funds. Like they're just
Yeah.
tokenized hedge funds. But then you had like Elixir. They just depegged because they couldn't make redemptions, and it was just everybody was kind of just like in bed with each other. Just
Yeah.
basically, it's like I lent to you, you lent to me. Honestly, like not that much different than what happened with Genesis in 2022.
3AC.
But if anything,
Yeah.
it's at a much smaller scale.
Yeah.
So
Yeah.
it's happening on chains at a much smaller scale, and you can see exactly what happened because you can see like the transactions on chain and stuff, which I guess is an improvement if it's smaller scale and we can actually see what happened on chain. But basically, this would be if like an operator in Cap like runs off. Uh, like what would happen, instead of them just running off, the restaker would get slashed. Like this would never happen under Cap.
Yeah, this is like what's interesting. And so on Cap, if something like that happen, is like the delegator and operator's responsibility to go after each other to like pay back and to get the money. They have like
Mhm.
all legal agreements and all this stuff. Since it's like uncollateralized, you need to like you need some warranties. And on chain, your wallet's not enough. You just can create other. So it's like
Yeah,
it's not
it's
that
it.
simple.
The game completely changes when you have money on the line. The game when you
Yeah.
actually have like, oh, like I could be punished, instead of like, oh, I
Yeah.
could like have this huge gain, but like, oh, like what if I lose this? It's like a whole different psychology going on there.
Yeah, yeah. And the other thing is on this system that we have right now with all this like this tokenized hedge funds, the creators and the lenders. There's like the lenders of the USDC are the first ones to get hurt. And like there's I don't know how much is stuck in some vaults. It's still stuck in some vaults without liquidity on Morpho and Euler because of the some creators got hit bad. And but the lenders get like the smaller the lowest yield. They were supposed to be like the senior tranche. They were supposed to be like the last one to get hit. It is the opposite. And on Cap, it works like the other way, right? It's like the guy that has like the biggest to gain is the first one to lose. That is the operator, and then it comes the delegator, and the last
Yeah, that's the
one
way I think of
comes
it.
the user.
Yeah.
So
It's
yeah,
funny. Yeah, it's funny.
so
People are like, "Oh, but like the risk taker can get slashed. Like it doesn't eliminate the risk." I'm like, "There's no eliminating risk. This is finance. Finance is all about if you want like yield, the yield
there's
exists
yield, there's
because
risk.
there's a risk. Like
Yeah.
there's no such thing as a free lunch. It's just the risk takers. They have the resources and ability to do the proper due diligence, to put up the capital, and if something happens, they have the ability to take legal action against the operator. So before,
And
usually, well, actually, pretty much every time before like a delegation happens, they sign a legal agreement saying like uh, uh, the operator and restaker sign a legal agreement, and this is akin to like a surety bond, and it's basically something like, okay, I like to think of it as the best metaphor I like to use is if I'm like applying for an apartment and like for some reason I don't qualify because I work in crypto and I'm a contractor, so I have to get somebody to like vouch for me or like someone to be a guarantee on the lease. So I get like my parents to be a guarantee on the lease. And so let's say so they guarantee the lease and I go pay rent, but let's say I don't pay rent, then my parents get screwed. Well, by the landlord. Well, my parents can sue me because I signed like an agreement with them. They signed because they're like because they're the guarantee. If that makes
yeah, I
sense.
don't know the word in English. Yeah, it's
Yeah.
kind of like a financer. In if you translate like a free translation to Portuguese, it's like a financer.
Yeah.
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 And yeah, that's interesting. And because I think this like raises the all that happened this week raises the question about like the security and all the what can how can I say
Well,
the risk management and risk
yeah.
management.
Here's. I was like listening to that Xerox Law podcast with Taki,
Yeah.
and I guess it's funny because I feel like I was listening to it recently, but I never
Yeah.
really heard of stream finance before. It felt like it was like some
Me
other
neither.
separate DeFi universe. But it sounds like him Xerox Law he built up a trusted reputation
Yeah.
over the years as someone oh he gets returns, oh he's smart, oh he's reliable, um, and but it's funny, like just because you're the man up to a certain point doesn't mean that you're going to continue being the man in the future.
Yeah.
Sometimes like you obviously like when things like when you try to scale things, you go more and more on the risk curve. That's when
Mm.
things get dangerous, and that's when you have incidents like the following occur
Yeah.
happen. People are just. I think that's also why cap exists, is because people are infallible. People are prone to mistakes. It doesn't matter if you're
Yeah.
150 gigabrain IQ gigabrain in the room. Like you're still susceptible to mistakes, especially in finance. Hell, Isaac Newton brought the top of the tulip market or something like
Yeah.
that. Like just because you're high IQ doesn't mean you're susceptible to risk. It's at that point it's like up to emotion. Um, and so
Yeah.
in the interview, I was just like listening to it. I was like, is this? I was like, in hindsight, like listening to this interview after Stream Finance, Fel was hilarious because he was saying things like, "Oh, if you're not beating Bitcoin, like,
Yeah.
what do you do?" It's yeah,
And yeah, I don't chase like a high staff. I have like a very strict risk management, and yeah, I haven't heard about
yeah,
him before the pod. I listened like a few days after it launched. I thought like this kid is like he's pretty smart, and like no doubt
yeah.
about
He's
that.
yeah,
But like sometimes, especially when you're like very young and you never like got hit by something, if you've never been punched in the face, you don't know how it feels to getting punched in the face. So
mhm,
you kind of
yeah,
like when you use it just to win, 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 you become reckless, and that's how you get wrecked. And I think that
exactly.
it works for everyone. I think I don't know if it happened to you, but it had happened to me in crypto before. So yeah, I think like everybody gotta pass through that in any point, and sometimes you lose it when you have like a couple $100, a couple thousand, couple 100K, couple million, and
Hmm.
yeah. So that's like a that big like risk in these like in these things. And man, now coming back to cap and adoption, you mentioned that you have like some like backers from traditional finance, like Franklin Templeton was like no, wasn't Breathing Howard. What's the name of the other like traditional fund that you mentioned?
Oh, so like Franklin Templeton, they led our seed round. Other participants in the round who actually are going to use the protocol in the future, like IMC Trading, Flow Traders. These are public companies. Susquehanna, which is a very respected shop in the
Yeah.
TradFi world. There's there's actually a whole, so those are like our investors. There's actually a whole list of operators on our website, and I encourage all your listeners and viewers to go to cap.app
Yeah.
slash swap, and you can see in the top left, you go to like protocol and operators,
Yeah.
you'll see all the operators of the cap protocol.
I can show you here. I have this open. No, I asked it because like here like the operators page.
Yeah, so you got Key Rock, Amber Group.
Yeah,
Yeah.
Hyperifin, Stakes on Concrete, and the delegators here, and you get like the protocol health.
Hmm.
I like to keep like this like open. If some questions come by, I can just like check the number. And what I was talking like regarding this TradFi guys is because the TradFi is like expanding like the stablecoin narrative, and they're pushing it hard because it is a better way to improve like a lot of things, payments, savings, money transmitting, and all this stuff. And we as time go by and these guys get more involved, we get like more like regulated and more like they're more like careful and more professional. Professional wasn't the word I was looking for, but I think it works. More professional, like doing like the management of capital and the risk. And cap is like a safer alternative than like most stuff. And how like do you see cap like playing a role with all like this like a quote unquote Wall Street takeover on into crypto and stablecoins?
Yeah, I see Cap as helping the bottom line for all these TradFi and Wall Street people coming on chain, and they can participate in different ways. One is borrowing from the protocol, becoming borrowers, because when they borrow from Cap, they can just redeem for the stable coins for dollars and perform their normal TradFi off-chain strategies. They aren't just limited to on-chain. So Cap, so I think that's what also that makes Cap really unique, that they can actually do that. Um,
Interesting.
and yeah, and also as like Cap expands and grows and scales, I'm sure like there's going to be some of these shops that have foreign currencies, as I mentioned earlier in the podcast. If they're looking for another place for yield on their foreign currencies, uh, they could just go to Cap. And even if like if I'm like a shop and I happen to have like a bunch of yen and I want to borrow too, I can restake my yen for, I don't know, like 1%, 2%, and then just take a loan out from the protocol, and I'm acting both as the operator and the restaker. Granted, in the eyes of the protocol, if I fuck up, I still get slashed.
Yeah.
But it's like another way to put like your yen,
Yeah,
yeah, stable
yeah.
coins.
When you
Yeah,
when you mentioned that, like I was thinking like about like Brazil because here our risk-free rate is like 15% a year.
yeah,
They're like they're the interest rates, and like some like more sophisticated player could like borrow some like dollars and the deposit here and hedging like the currency.
yeah.
Uh,
Hmm.
yeah.
That's
So
it.
something.
That would be an operator strategy that could be done.
Yeah, that could be like that could be interesting, and to do something like that. I don't know like which other countries have like a high as high as or
I,
close to what we have here. I think Brazil is like second largest in the world, second highest in the world right now.
If I would
Not
do with
sure.
Turkey,
Yeah, but like the Brazilian real is a shit coin, but I think the Turkish lira wins by a mile. So
yeah.
yeah, it might be too like too risky. I don't know. And man, on you guys mentioned like that cap is a stage 3 unstable coin.
Type 3
Can you
stablecoin. Yep.
can you like go over like what's a stage 1, stage 2, and
Yeah.
stage 3 stable coins? And did you guys create the terms or
Yeah.
you?
Yeah, my quant slash head of research, Jay, and and also our founder Benjamin, uh, helped, and a few other people helped create the Type 3 stablecoin framework. And it's basically a scale of security guarantees. Who is guaranteeing the yield? Where is the security coming from? And there's actually four types of stablecoins. So you have Type 0, and these are endogenous stablecoins. So they earn yield in it from themselves. And this is like the snake eating its own tail. These are your AMO stablecoins, like that use something like CRV or Arrow to prop them up. They use like CDPs. They have a reliance on something, which really limits that scale. That's why there's no major type 0 endogenous
Yeah.
stablecoins. So that's type 0. Type 1 to 3, those are exogenous stablecoins. So they earn yield from an outside source. So type 1, I like to call this one team, one strategy. And so this is usually like one team doing something internally, like it's an internal team doing one thing, whether it's like T-bills or the basis trade or something like that. And it's the positives about this, it's simple, it's easy to get. But the negatives about it is it's only one thing, so it can only scale so much. Like you can only have alpha and edge in one strategy for so long. And also you're still trusting the team. So you're trusting like the team. Type 2 is diverse team, diverse strategy. And so usually this is like by committee or DAO. And it's as the committee or DAO is putting into multiple strategies. And this is an improvement from type 1 because it's a lot more adaptable. But at the same time, you're still trusting the team. You're still trusting humans. They control the custody and all that. And the point I'm trying to get at here is humans are infallible. They're prone to mistakes, as what we've seen with Stream Finance recently. And so type 3 is instead of relying on people, you rely on markets, you rely on credible financial guarantees. And so type 3 stable cap is the first type 3 stable coins. And instead of having people allocate to strategies, you have markets allocate to strategies. It's a self-enforcing autonomous system that allocates capital to the highest performers. And if anything messes up, or screws up, users are protected. There is recourse that can be taken within a type 3 stablecoin.
Got it, man. Got it. It's pretty interesting in this all this like
Yeah,
classification
this
stuff.
this is what I did my talk on ETH Istanbul about, is the type 3 stablecoin framework.
Oh, cool. And man, about scalability, because it is like a like very well designed system, and it has like a lot of like all the components to grow. And how do you see like this to how do you scale this to like billions and billions of dollars, and to get like the necessary distribution like to like grow like cap as
Yeah.
like one of the top 3 to top 5 stablecoins?
Yeah, I mentioned this earlier in the pod, but it's all about finding those pristine blue chip restaking assets. So not just ETH and BTC, but foreign currencies, gold, hell, maybe silver. There's hundreds of billions, if not trillions, of these assets out there that could be put to work. And the only
Mhm.
way to get to billions, tens of billions, of hundreds of billions, is if you scale with these secure, pristine assets. And so there's like a lot of different elements at play, but those restaking assets that I mentioned, gold, foreign currencies, along with ETH and BTC, are one way to go.
No, no, yeah, this I got. I actually like didn't like put the question like as I should was like about like this market sizing right now, like
Oh, in the market right now, we're like, what's our
yeah,
plan?
yeah, it's in this like market size. I just like I misrepresented the question a little bit. And like in this market, we have like I think like 30, maybe 20 to 30 billion dollars in like raise taking if I don't know, like maybe 1 billion in BTC. And in this like market size, like do you what's the cap for caps growth, and how can you grow inside this like the pie that we have today?
Yeah. So I guess the in terms of ETH and BTC, the cap, like no pun intended,
Yeah.
is like how much like ETH is out there and how much BTC is out there to be restaked. But in terms of growing right now, it's a real key part is our integrations, and working with with major integration partners. I'd rather have like quality relationships with a few that will really help us scale than spread ourselves too thin. And so there's Morpho, there's Euler, there's Pendle. Pendle's been huge for us. A huge fan of Pendle. I've written about Pendle the past few months. I think it's an awesome protocol. I view it as like the end game for pool tool, giving more optionality to users. If you want something safe, reliable, hold the PTs, the predictable token, I like to call it. If you're a little bit more degen, want to speculate, have high hopes, want to believe in something,
Yeah.
hold the YTs, have fun with that. And so I think Pendle has been a huge asset to us. And just like developing relationships with different LPs and communities around the world, trying to get out of our usual English speaking CT bubble. Hence, I'm here. I mean, although I'm giving the opportunity in English.
Yeah,
Like,
but I always put captions in Portuguese for the people
oh,
that don't speak English.
perfect.
Yeah,
Oh, legal. Sorry.
yeah,
I,
that's
my,
nice.
yeah. So, we've definitely grown quite the community in places like Korea and places like Turkey. Um, people are using Cap. People are farming Cap. People have high hopes for Cap, and also in South America. And I'm going down to Floripa in a bit, so I'm excited to go
Uh,
down there and
going to
spread
spread the word.
the good word, the Cap gospel far and wide.
Yeah,
But yeah, all about relationships at the end of the day, whether it's with your
yeah,
capital allocators or protocols.
yeah. One thing like about like stable coins and not like just stable coins, all like kind IOU kind of assets, and they need like two things in my opinion, like to scale. It's like partnerships, uh, slash integrations and liquidity. And you guys are running the Frontier program, right?
Yes.
It's the points program where you incentivize this. Can you comment a little bit on the Frontier program?
Yes.
And
So the Cap Frontier program is our program to bootstrap the Cap protocol in our stablecoin. For performing certain actions, you get rewarded caps, which is our points. And with constructing this program, we are very intentional and thoughtful in where we direct our caps. We didn't want any of our caps to be wasted or anything like that. That's why we actually don't have referrals, because we didn't want referral bot farms to take over. And so it's actually quite simple, like what we're incentivizing. So we have 10x caps points for just holding COSD. If you're holding COSD, you're earning caps. We have 5x caps for holding YT stake CUSD. So that's the YT of stake CUSD. So people are speculating on the yield of the cap protocol. And on top of that, they're earning caps or points. And then for those that really want to farm, there's YTCUSD. And YTCUSD is 20x caps. And you could, I forget the amount of leverage right now. It might be like
I
38.
can check here.
Yeah, it's like 38x.
Yeah, it's something around that. I checked this like a couple of days ago. I'm a big YT guy, so
Yeah, I mean, not just for Cap. I think for like, if you're able to find like the right protocols and able to like figure out certain statistics, you could.
yeah,
It's a pretty good like risk reward.
yeah.
But
That's
yeah,
something I do a lot, to be honest. Like me, and there's a big like farming community like in Brazil that like we do a lot of this stuff, like the math with the YTs and the PTs and stuff. Yeah, it's 36, nearly 36x leverage
yeah,
right now.
yeah. So like $1, like that's crazy. You can just like so much more bang for your buck if you're just interested in farming and holding the YTs. So it's like 20x cap on top. So yeah, on top, so like that $1 goes so much farther because you're able to like leverage it 38x, or one CSD goes so much farther. So those are the main activities. We are also offering 1x caps for people that supply USDC and lending liquidity to Euler and Morpho
Yeah.
to those different siloed curated markets, because if people want to loop the PTs safely, I always say safely, please be careful with that.
Yeah,
They
yeah.
can. Yeah.
Not DJ loops against like hedge funds that you cannot see what there is inside, please.
Yeah. Yeah, exactly. And with Cap, what's inside. You can see it all on chain.
Yeah, that's cool. And man, you wrote a blog post about like, an article actually on Twitter about the Frontier program, and there's something that yeah, I got like it caught my attention. It's like when you were mentioning the STCUSD, that you can like check and increasing borrows to uh, if you're seeing like delegators coming online, probably gonna be like increase the yields. Can you talk a little bit more about the
Yeah.
strategy? Give this alpha to the guys listening here.
Yeah, so like, well, my thesis is I'm not sure if it actually played out. Actually, looking back, but in theory, if you keep track of the delegators coming online, let's say like one person has like 26 million, and there's you see like $100 million coming in. In theory, like that should be another $50 million worth of borrows, and then the APY of the protocol should go up. And so, but that's all in theory. But that's all how it actually happened in practice is like people will delegate, but like people may not borrow right away for whatever reason. And
Mm.
so, and also like I feel like this kind of alpha and arb exists for a short amount of time because the protocol
Yeah.
usually self-corrects. It usually reaches an equilibrium. Like if you see like if it's at 15%, it's only gonna be at 15% for a short time. It'll probably go back down to like, what we've seen is like around like 8 to 10%.
Yeah, the APY actually spiked, and like from since like November 4th. Is there anything like related to like some redemptions and stuff?
Yes. So yeah, people have just been unwinding their loops and just unwinding from the protocol. So that's the main thing. So that's why you've seen the interest rates for stakesy USD go up.
Mm.
But this is a system at work. So like people are, withdrawing, or like people are, withdrawing, and the yields are going up. So those that are sticking, and they're taking advantage of those high yields.
Yeah, yeah. It's like it's all about like the incentives, and like these situations brings like interesting like opportunities to Pendle. And the other thing I was wanted to ask you, still like on the all this week like situation is like Cap was like a lot of withdrawals, not just Cap, but like a lot of things that was related to stable coins and to yield got a lot of withdrawals because of like curators needing to like plug the hole in the other stuff. And I'm pretty sure like you should have like get a lot of questions. Is Cap okay? And are you
Yeah.
guys good? Yeah, and how like was to how like hard it is to like to educate people to not associate Cap with this is not just like particular to Cap, but since we're talking about it, and to on-chain hedge fund. Like when I see my first like instinct reaction when I see some like new yield protocol, it is a stablecoin or a stablecoin, and I always like assume before like start reading. Of course, I always assume it is a tokenized hedge fund.
Mhm.
And how do you like do this like education process to your community and your users? And like how do you see like do you think this is going to change about like the tokenized hedge funds being called USD something,
That's
because
good.
this is pretty misleading.
That's a good question. Yeah. So yeah, it is a challenge, of course, because people they only have so much attention in their day they could focus on different things, and that's why your first impression to people is so important because they'll look at something, they'll be like, oh, this is what it is. They'll digest that, and they'll go on, and like for the rest of the time, they'll be like, oh, so and so, and it's like very hard to escape those first impressions.
Yeah.
And so that's why we've really been beating the drum on like things like type 3 stablecoins and like giving people a framework to view cap. Personally, for education, what I like to use is metaphors, and not talking down, but talking at the level that people can understand, whether it's explaining PTs, whether it's explaining how cap works, whether it's explaining how restaking works. The main differentiator with cap, I mean, there's a few main differentiators. Uh, Technically, it's the use of restaking to ensure and underwrite all the activities of the protocol so users are protected. But also on top of that, CAP is really the conduit bringing institutions on chain. And you see this over and over again, whether it's with an announcement with Wisdom Tree last week, whether it's the people involved in our round, whether it's the announcements that are coming up in the future. When is this coming out, by the way?
It's coming out on next week on Thursday.
Thursday. Okay, so this announcement should be out. So we're Ho- so I guess since it's already going to be out, we're actually going to have Eigenlayer is like finally going to be live, and the first operator
Yeah.
delegator cohort to come on Eigenlayer is Flow Traders and Yield Nest. And Yield Nest will be using OETH, Origin ETH, as the delegated asset. And so Flow Traders, That's a publicly traded company in Europe. That's like, and
Oh,
they're borrowing from the Cap protocol. Like,
oh, that's cool.
yeah, just think about that. Um, and so Cap's ability to be an attractive option for institutions to come on chain in a meaningful way and actually use these protocols um, is very significant. We talk about where the institutions are here, like, but what are the institutions actually doing? Are they just like sitting around on their hands as they hold an asset? Are they actually participating in the same games as us? And so,
Yeah,
yeah.
yeah, that's interesting. That's cool. That's pretty cool. And man, do you think you guys like solved like under collateralized loans for crypto? Do you believe you
Uh,
have solved it?
I think we're one such solution. These loans are like, it's because in the eyes, like I said, in the eyes of the borrower, it is uncollateralized. But in the
Mm,
eyes of the protocol, it's still fully collateralized. So you know what? Like, as what we've seen, it's like I wonder if there'll be more solutions. But for now, like, I guess the answer is yeah. Yeah,
mm.
we solved it. We solved it.
Yeah,
It's not
yeah,
yeah.
yeah. It is a very my bad. It's a very tricky question. Like the word solved is a little bit like it can
Yeah.
be
I
a
think
little bit exaggerated.
yeah,
Yeah,
like protocols evolve and they adjust, but I think we've done a pretty good job. I mean,
yeah.
we've all been working on this too. Like the pedigree of the Cap team is, I worked at all these different places. Cap, Frax Gelato, Dinero Redacted. Benjamin was the founder of a stablecoin Chi, which was probably the most multi-chain stablecoin out there. We have all the beefy finance devs that they've actually handled billions of dollars in their smart contracts. There's probably like 50 to 100 devs. I think probably like 50 devs that can say that their smart contracts has handled billions of dollars, and we have like three or four of them. So
That's like a pretty stacked team. And like when I asked about like the uncollateralized, because it is like a very like appealing selling point to any crypto fund. Like this is like if I'm a user, I don't want to have like the your liabilities. I don't want to have anything to do with that. But if I'm a fund and like can like take money and to run like the alternative stuff, anything, and I don't need to deposit collateral. This is like pretty new to crypto. So I think this is like a very unique selling point. And this is what got my attention to Cap. When I think I saw that, I was like, then this is it's different because when you're choosing like to farm something, you usually like either you want to farm and dump or you want to farm something that's potential, like as investment, like using like YTs, for instance, to buy a stake in that thing. And I look into Cap, I was like, this uncollateralized stuff is very interesting, and this is can be
mhm.
a big unlock to a lot of things in crypto. Do you have any like direct competitor right now?
No, I don't think we have any. I don't think well, there's no one building that we're building right now, and our system can actually it's very symbiotic with a lot of other stablecoins out there. Like in
Mhm.
theory, Athena could become an operator in the Cap protocol.
Mm.
Yeah, in theory, yeah, like there's other stablecoins I heard out. They can all become operators in the Cap protocol.
Interesting. Is there any like minimum or maximum duration for the loans?
No,
Or
so with the no with the loans are akin to an Aave over collateralized loan, so they just have to manage it.
oh, cool. And man, on Cap is mostly this. I want to ask you a few more questions. Like there's something that I was thinking about when listening to your podcast with Bart and about Pendle. And like I'm a big Pendle guy too. I really like what they're doing, but like they grew on the points frenzy, and I want to get your opinion as someone
Hmm.
like that's very experienced in DeFi. And do you think like when these like high quality projects TGEs go by and all these incentive campaigns stop, and from most of the quality stuff, and how do you think like the YTs in Pendle here will survive? Because from where I see now, there's like not a lot of like a real like yield trading. There's a little bit, but not much. Most is like point trading, and like how do you see this? Just a personal opinion.
Um, yeah, Pendle's interesting because it's a protocol really reliant on there being other new protocols coming out. So there's
Yeah,
new things that people can speculate on, especially when it comes to the points. So as long as there's high quality protocols coming out, and that get people excited, uh, then I think Pendle will be fine. And also like in the inverse of this question is like with the PTs, like people like to FUD Pendle and say like, oh, like the PTs are coming due, like it's going to expire, it's going to lose all this TVL. I'm like, well, that's just how the protocol works. Of course,
yeah,
it's going to lose the TVL. I think like the most important thing for Pendle is the trading fees because it's basically it's an exchange, basically it's a yield exchange,
yeah.
basically. But yeah, it's up to Pendle to be out. So I'm sure they have a phenomenal team, an excellent team. We're in close contact with them, and they're always on the hunt for new projects out there. And so yeah, it's just like a matter. It's like I don't know. It's like anything else. You gotta like keep. You have to just keep sniffing around for new projects.
Yeah, yeah. Because like what I think about Pendle is like you can speculate on yield, but you don't have like a big demand to speculate like only on yield right now. Like
Yeah,
you can like I like to do it sometimes like for the SUSD YTs and like oh, I think the market's like about to go to getting hard, and I think the funding rate's going up and by the YT and wait a little bit so, but there's
it's a tough thing to speculate on. I
yeah.
learned that like like speculating on like will the yield go up or down because you could be like because the market could be wrong wrong, but
Yeah.
it can stay wrong longer than you can say solvent.
Yeah, yeah, no, for sure. And it can remain wrong longer than the maturity of the pendle pool.
Yeah,
And
that's the other thing. You're dealing with the maturities and stuff.
yeah, it's pretty complicated to like do this in like a proper manner. And man, I was thinking about other things like about tail risk in GFI in general. And after like this week,
Okay.
I
Yeah.
yeah, I was like doing a U trade on the Strata Junior tranche, and the trade like was a layup trade, but there was like a tail risk that was like someone blowing up and the curators needing to get money like out of the vaults, and the borrow yields skyrocketing. They need to like uh, unload their loops, and anyway, and Aave yields went up and everything. This was like a tail risk to my trade, and I was like, this is something like people don't usually think about it in the day to day. I don't either. And like, how do you look into tail risk in general for cap as like a risk management standpoint?
Yeah. We take security very seriously at CAP. We've gotten our protocol audited 5, 6 times. It's all in our GitHub. Like I said, all our devs are from Beefy. They've been around for 5 years without incident. And so it's something we take very seriously, and we can we consider we when especially when it comes to like our protocol and especially with our devs, they take in all considerations when it comes to how we deploy cap and how the protocol functions, both
Yeah,
technically and from a game theory and all that
yeah,
stuff. So it's something that definitely our team thinks about. To be honest, I'm more of the marketing hire personality guy, so I'm not like the expert in tail risk. Although I've been around long enough to see things,
yeah.
but uh, that's yeah.
Yeah, but I got it. I think it was clear. Like if you start talking about like too many details and math stuff, and I might wouldn't understand, and most
Yeah.
listeners wouldn't either. So
Yeah, I
yeah,
guess like terrorists, like it's like the lesser dependencies you have, the better. You
yeah,
just want to keep it as simple as possible. Like with us, you just rely on, you know, eigenlayer symbiotic. Um, that's like the main that's the main tail risk, to be
yeah,
honest. Yeah.
yeah. And this is something like that you cannot like just. I'm not gonna be exposed to that. It's like it's the design of the protocol. So yeah, man. And to before wrap, I always ask like a few questions and to every guest. And the first, mentioned something that I think you might use this as an answer, but like, how would you describe cap in one sentence?
Um, CAP is the protected private credit engine of the internet.
Nice, protected private credit engine of the internet. This is a cool one. And the other thing is an alpha for the listener. It doesn't need to be like about cap. It doesn't need to be about the market, about the token. It can be like about anything, anything you want about life, about like navigating markets, about like being
Mhm.
crypto, and yeah, anything.
Managing risk is the most important thing you can do. Like when making financial decisions, understanding things not in a sense of a system instead of just how does it affect me, but rather like how does it affect the entire system. Um, I am not. I wish I could was like. I wish I could take my own advice sometimes, but managing risk is not something you do emotionally. It's something
I
you
feel
do
you.
with like a cold heart. And also eat protein. Eat protein. Don't eat carbs. The more protein you eat, actually, um, the more muscle you gain, and the more muscle you have, the more fat you burn by doing nothing. There's actually like 25% of the time you're just sitting down doing nothing. If you have muscle that's just burning through fat, that's much better if you're like skinny fat or skinny or fat. So
Yeah, and a healthy body helps with a
yeah,
healthy mind, right?
yeah.
It's better for to work. Man, thanks very much for coming. And where can people find more about you and Cap?
Yeah, so people can follow me on Twitter at DeFi Dave 22. They can follow Cap at money underscore. Join our Discord. Go to our website cap.app and go ahead, use our app. Play around with the YTs on Pendle. Have a good time. If anybody ever writes content or about Cap, feel free to message me and share. I'd love that. I always try to reach out to anybody that creates content about Cap. And yeah, I'll see you on chain and I'll see you online.
That's great, man. Thanks very much for coming. Really enjoyed the conversation.
Yeah, thank you
See
so much,
you.
Thiago.
Hope to see you in Argentina, man.
Yeah, thank you so much. Obrigado.